Welcome everybody to Tom's Friday afternoon session. Let me just show the chart on your screen. Right, okay, Tom, over to you.
Sorry about that, folks. Yeah, hi everybody. Tom Williams here. Thank you, Peter, for that. Gavin's been here most of the day. It's 5:30, as you know, in England, and he's been, or we've been trading live, and it seems to be a very favourable day today. Fairly easy to see the signals, and fairly easy to see what's going on. For example, this is a 7-minute chart of the mini S&P, and we're sitting here watching this, and a signal came up that you don't see very often, and even Gavin mentioned it, and here it is. Is that it?
That's the test after shakeout. Stopping volume.
Right. Okay. Okay. I think it's on a different time frame, but the principle's the same, and it's called bag holding. Well, hang on. Let's see if I can. Can you put a 5-minute up? 5-minute. Isn't that it? Oh, it doesn't matter now. Put that 5-minute back, I'd do. But I can assure you that we're sitting here, and there'd been a decline, not too severe, but it was certainly falling off. And we got a signal, bag holding with others as well. And of course, bag holding is when the market occasionally becomes very, very bullish, because there's a down bar on a very narrow spread where it closes middle or high, or middle usually, and the volume or activity is very, very high. That means that the market is absorbing large amounts of contracts from the professional side of the market. And it's so obvious, we call it bag holding. In other words, the professional operators open up the, like, mailbags and say, okay, throw everything in, we'll take the lot. And what that means is that it results in a down bar, narrow spread, because the lower part of the bar is being supported. It's unable to fall with all the buying going on, and that creates a narrow spread. And we know there's a lot of buying going on because the volume would be ultra high, very high. And don't forget, volume is activity. And there was 1-2 other signals there as well. So we actually went long, and it actually came a little bit off next bar, which I thought was a bit unusual. But as you can see, it's gone up, and the market's been steadily going up ever since. And I said at the time, I said, this market's going to go up today, Friday. Nothing's 100% accurate, but it's pretty certain it's going to. Now, what's interesting is, yes, it was just down here somewhere. Can't remember what time frame it was.
Was it on your screen or Gavin's screen? Test after shakeout.
Well, it was like that, yeah. But notice how the simple trading system works. And when you see this, it's telling you that the professional money are in full control of the market. There's no query about it. And look how they support the market. They do this, right? The close has to be higher than the close of the previous bar. Right? Higher, higher. And with colours of bars blue, right, you allow for 1 or 2 down bars, and they have to be, or are usually, on low volume. Look at that down bar, narrow spread. It's almost like a test look. Up, up, up. Now use a red arrow look. Normally in a bullish market they're tested. Of sort. Up, and there's probably the test, the down bar look. And look at that low volume. Right, low volume. There's no selling pressure at all. Once you see that, you know the professional are not bearish. They're still bullish, up, up. And you have some signs of weakness have come in. Mostly that is no demand. What? Let's have a look. What's the what's that say? Right. See, the computer really, I mean, it's all we're interested in is weakness appeared. But these computers, I must admit, are clever. Because they'll present things that we may not automatically see. Weaknesses appear. So read these dialog boxes. I was told that people don't read them. Right. Now, I think I did last week. Whenever you see a red arrow appear in an up move, if the next bar is tested, you've got to pay particular attention because it could easily be a sign of strength. Now there, the next bar look, it is tested. In other words, it's gone down. It's a peculiar looking test. It's got top tail. That's what's brought that. Another red arrow up. But there's nothing serious enough there, in my opinion, to stop that move. You've got to stop in place, so up it goes. And that's the current position of the 5-minute chart of the S&P 500. And now also, on the bullish side, if you look at the daily chart of the future, yesterday was a test. Now, come on, do you think we can look at that? Yesterday's daily chart? Yeah. Right, that's right. Okay. Now that, to me, looks strongly like a test. Now, admittedly, there is a little bit of supply there. Right, and then today, they marked it down at the opening, look. There, they marked it down at the opening. But again, that looks like a test. And up it goes, and that's the current position at the moment. And notice how this market here got the first red arrow here. Now you might think, oh, that doesn't look very good. But once you understand Wyckoff, that can be very, very useful. And very, very useful if you eventually start using the point figure chart. That's very useful. Because that will be an area of early weakness. Right? Put the 7-minute or something back. Okay. Now tell me, are there any questions here? Peter's looking at the computer.
Okay, so looking at the questions here, there's one from Chris. Tom, this test on high volume yesterday is the cause for today's run below yesterday's low. So do you want to answer that, Tom?
What would he say?
So this test on high volume yesterday is the cause for today's run below yesterday's low.
Well, I'm not quite sure what you're saying, but whenever you see a test, whenever you see a bar that looks like a test and it closes up on the high, it's got to be an attempt to test the market. Now, there has been quite a lot of supply around, admittedly, and no demand up bars. But whenever you see a test in a daily chart like this, you have to assume in your mind that that market wants to go up. And it's very important then that when you look at your charts, you could be influenced as the market's running live. The fact is you saw this test yesterday. I'm not quite sure fully what the question meant or was.
Right, so a question from Maurice about Amazon, the online retailer, asking us to look at the 15-minute chart. Unfortunately, we don't have that data, Maurice. Sorry about that. So we can't look, or Tom can't look. So what have we got next in the list of questions? So this is from Edmund. The selling pressure is tested two bars back. Sorry, I'll read that again. The selling pressure is tested two bars later in the black bar. Then the market goes higher. So which chart are you referring to, Edmund, so we know? The 5 minutes. Let's go to the 5 minutes. So this was said a few minutes ago. So I assume, Edmund, you're talking about this one here. So Tom's saying, oh, yes. So the selling pressure is tested in the black bar, then the market goes higher. So yes, you're right. Let me hand you over to Tom.
Who was it? Edmund. Edmund, that's very good. Marvellous. True. So it is sticking to its guns, the market. When you see these red arrows like this, you would normally expect a test. That's a
Carlos noticed it too.
And Carlos, right? And of course, this you're right. This is a black bar. It's a test look. There's little or no selling on it. That's why it's gone up. Thank you for noticing that. Actually, my eyesight's getting so bad, I didn't actually see that straight away, but certainly is there.
Thank you, Tom. Now, a question from Alex. It seems that as the price rises through the day, the volume progressively goes down. Is that possibly a negative?
Well, declining volume as the market goes up. They used to call them divergence, but I think that's a little bit old hat. But there's obviously a little bit of no demand building up in the chart. But you can't just base your analysis on just that one fact. You need to look at the chart. Once you've experienced a reading chart, you can look at the chart and more or less sum it up within literally a few seconds, which is interesting. So you don't have to worry about testing or worry about formulas or anything at all, supply and demand, when it's running, it's pretty obvious what's going on. I mean, the buy signal's right at the bottom of this move. I definitely saw bag holding. Gavin was here. And there are other time frames seem to have all sorts of signals. But they're all signs of strength.
Okay, thanks, Tom. So back to the daily of this chart. Edmund asks, if this current daily bar closed where it is now, would that be seen as a weak bar? So we look at the volumes quite low. So the volume as well as the closing. No, you have to put your magnifier on, Tom. Yeah, it's on 20. Yeah. Tom's putting his magnifier on, so bear with us. So, right a bit. That's it. So that bar that's not closed yet. Edmund's asking, if that closed like that, would that be a weak bar or a strong bar, I suppose, is the other side of it. But folks, do bear in mind that never trade on a bar that has not completed, because sometimes even the last few minutes. So Tom's saying it definitely looks like a test. So what he would be saying is the previous test there. But Tom, this next one here, if it closed like that, which is closing in the middle, the volume is low, would you say that's weak or strong? If it closed like that.
If it closes like that, it's a negative bar. I just think the market is trying to find its way.
Yeah, so Tom's saying it could be a negative bar, that the market's trying to find its way, so it's not clear. Is that, Tom, because you'd expect the market to go up based on the previous test?
Well, normally, a strong market...
I'll hand you over.
To that. Because we know definitely the market moves on supply and demand. You would, well, this is definitely a test on this previous bar. Sorry, I've lost it. That's there, look. That's definitely a test, look. There's even got no top tail to it. So it's a proper test. More or less a proper test is from the opening, the close of the previous bar, and the opening. All it really wants to do is go down. It goes down, narrow spread, closing near the high, right? And lo and behold, well, in this case, the volume is, yeah, it's quite high. Why? And that means, don't forget it's the future. That means they're probably buying. Well, they must be buying in there. And that's because it's on this trend line. So all you have to, but there was very positive signals in the intraday charts during the day, as we saw. The market was fairly easy to follow today. Now, Gavin's has invented, or they've designed, I had nothing to do with it, these alerts where they email you out, and then you could go and look and see what you think of them. And there was an alert on silver, apparently, of weakness. And the trouble was that the alert went out, and within minutes, apparently, the silver market collapsed. And somebody called in and complained that the signal, yes, was right, but it wasn't too early. It wasn't early enough. So we'll have to look at all that, see what we can do.
Next question. All right, thank you, Tom. So what else have we got here? Just checking his questions here. Yeah, so don't forget, folks, if ever you see a bar that looks interesting, make sure it's closed before you take action. That's my personal choice, personal advice, because I've come unstuck myself. So would you take a look at gold on the daily and intraday? So that's from Alex. So Alex, we can look at the daily, but not the intraday. So let's take a look at the daily. And Rita's back in the room now, so Rita will probably be reading the next question to you. So I'll pass you over to Tom. We'll go to the gold chart.
Right. Is this
This is the gold ETF, which is up to date yesterday. I might actually put the end of day out, just to be sure. So bear with us.
right? We're just updating the. Now Reese's back from doing a little job, right? But she's been away for a week's holiday down at a health camp in Somerset, which is a county in the southwest of England. And she's certainly not overweight, but this health camp is supposed to get you even more healthy than you are. And she feels great, she says.
So we're sending Tom down there tomorrow.
I think we'll all go down there for a week. See what happens. We could broadcast to you from down there.
Right, so gold, there's gold. Apparently, up to yesterday time. Gold contract. What do you think?
Well, you see, Gavin's been following gold, as you all know, for some time. And the software did pick the tops. I don't know how far it goes back, way back here. It did pick a lot of tops. And Gavin has been bearish ever since, all the time. It's going down, it's going down. Now, we did a seminar on gold, or looked at it when was it, Reece, you remember? A week or two? And we observed all these signs of strength here. It's definitely, what? They came in. See, there's all this lot here. So, as I say, you ignore the signals at your peril, because those signals are only generated when the sequence occurs where they recognize professional players have stepped into the arena. And I'm sure you recognize that yourself. It's on beyond, they're beyond down bars. They'll be on increase in volume, and so on and so on. Now that was there, and I kept saying, well, wait, hang on. This can't be all that weak. And it's been going up, so there is a slight, I'm not sure if Gavin's looking at monthly or what on earth he's looking at. But it's gone up from there. From these lows, but only because of the strength coming in. And this would be a test. Now there's our old favourite that we keep talking about. We got a red arrow up here in a rising market, supply, and lo and behold, we have a test. A test. Now you all know what a test is. A test, they want to know, right, okay, we've seen the red arrow, okay, right, now we want to see if the market is, in fact, loaded with supply. So we test the market. And the market then says, no, I'm okay. They're fully aware of this. And up it goes, pushing up through that top trend line. So as far as I'm concerned, that market at the moment is still bullish. Yeah, go on.
Oleg, Alex is saying it seems to me that it can't get past that level, 1350.
What, here? Yeah.
This. Now, what do you, is that possible, Tom?
Hmm?
The volume has dropped off once it's gone through that trend line.
Yeah, well, I'm probably, when you look at the longer time frame like that, you can see, in fact, you can see what gap is going on. It is a downtrend. Put that back. Look, you can see it's in a clear downtrend. It's hit that top trend line, and it's highly likely to come off again.
Yes, the bar on 17. High volume.
Oh, here, well.
Okay, shall I read the question?
Yeah, read the question.
I'll just read the question.
Yeah, go
on. Oleg, who's saying it? Chris is saying, how would you interpret the red down bar on the 17th with high volume? That bar that this bar here, there's a down bar, Tom, with very high volume. How would you interpret that?
I would say in hindsight, of course, that there's buying there and there's also selling. There's supply and strength all wrapped up in one bar. What else can it be? They determined to take it up higher. We're looking at Gavin's just here. We're looking at gold, Gavin. Now, you've been bearish on this for ages, haven't you?
I was bullish the last 3 weeks. I've been long.
Ah, sorry.
I've been actually long. But the trade alerts we've given have actually been to the long side. Was the one I gave 2 weeks ago.
Do you want to say it quickly?
Yeah, hi everybody. I'm with Tom. Just so you know, I was with Tom a few weeks ago, and we saw some strength in gold, and he said, "Look, I know you're a bear on gold, Gav, but you can't ignore the signal." Well, he was right. The trade alert that I gave, well, I've just been doing a review of the alerts for a magazine, and basically the alert that I gave in gold was a swing trade position from 1326 to 1350. It went up to 1348.70 exactly before it hit some supply. So gold is actually in a range at the moment. Do I think gold's going to head for 1,000 at some point? I still think it will. And the reason I think that is the evidence is there in August of 2011. We haven't seen volume of that size on the monthly chart. The other thing is, of course, it's heavily manipulated. It's a very manipulated market. It's not beneficial for the large banks and institutions, or certainly the governments, to have gold going too high. So who do you think operates in the paper market to bring the physical price down? Now, what confuses some people is they say, well, look, we've heard news that China's buying up all the physical gold. Well, if that was true, and we believe in the balance of supply and demand, the price of gold would be at 3,000. But it's not. And the paper and the physical have to trade at the same level. So gold at the moment is actually trading in a range of between 1,300 and 1,350. Once it gets down past 1,300 again, then it's going to hit 1,200, and then I'll do an alert. But at the moment, certainly since a couple of weeks ago when it went up to 1348, I was looking at longs. But to be honest, today and a few other days as well, we've had short trades during the day. So you trade what you see in gold. It's a daily chart. I don't hold positions now. I'm not holding any positions in gold on the long term anymore. It's all short-term trades for gold. Here's Tom.
Right. Thank you, Gav. That's a very, very good analysis right there, look. Gav is his own man, and he does what he sees fit. And I'm sitting here and I do what I want to do. But what he just said certainly sounds correct to me. Any questions on that?
Some more questions. Lisa.
GAC is asking a question. Is the previous fourth up bar with low volume and widespread considered a weak bar? Do you mean this particular bar? I assume, yeah. Is that, Tom, is that considered a weak bar? Yes. Well, yes, it is really.
Holiday, a holiday, a half day or something weird. Well, it's certainly gone up there on no demand, hasn't it? Obviously, that will represent a weak bar. But we'll have an opportunity to trade this. Keep in mind you're looking at the activity of the professional player in the background. And that could easily be a weak bar, gone up like that on that low volume, assuming the volume is correct. And the widespread up close and high would definitely show that it was a deliberate markup. It's overbought, top of that trend line. So as you can see, when you look at longer time frame now, you had before. Now you can see it's clearly running in a downward. See gold's there, Gav.
I've just had an email alert
Okay, so just looking at the questions coming in here. Yeah, so hello, Eleni. Palladium and platinum. No, I don't know the codes offhand, but I bet they begin with a P. Well, there they are. Look. So palladium. So that's the long term or the longer term, just like that. It seems to be going in a channel sideways. So Tom, this is palladium.
Right. Well, nothing jumps out at me from this chart that I can see. There must have been something happening in the background for it to go up like that. You see, yes. See, if you're trading one of these contracts like this, you need to specialize in the subject. In other words, you keep a sharp look on this continuously. You don't take your eye off it, and you can more or less get to know what's going on. But when you see these markets like this, this looks bullish from my point of view. Not obviously bullish, but it looks bullish. I mean, where's the weakness? You can see the top has rounded over slightly, so there's a little bit of supply there. When you get these arcing over like a mushroom top, there are spouts of high volume. But to me, that looks bullish.
Next one is platinum. That's the longer term, and that's the shorter term. Platinum.
Well, same thing with platinum. I don't follow these charts. Commodities can be very, very dangerous because they have this limit up, limit down, which sounds as if it's for your benefit, but if you think about it carefully, it's not your benefit, it's their benefit.
That's platinum, but weekly. So the longer term looks like that, and then the shorter term weekly looks like that. Have you got anything to add?
Well, it appears to be trending down slowly in the long term. Platinum's not, is it platinum?
Yeah, this is platinum.
Platinum. is not renowned for its volatility. It's probably quietly traded in the background with professional money. They will know fully well what they're up to.
Mitch wants to know what limit up, limit down refers to.
Right, limit up, limit down is something they introduced into the commodity market some years ago, and they tell you it was designed to stop volatility. In other words, the market can only fall so much before this automatic limit down comes into play, where they say, right, you've reached your limit, you cannot fall any lower. So we cut them, they close the market. Now that sounds great. If you are on the wrong side of the market, it sounds as if they're protecting you. But if you think about it carefully, it's for their benefit, not yours. That's limit up, and they also got limit down. And then the problem is with limit up, limit down, is that you can't get caught in the trade. You're unable to get out of it. Because every day it's reached its limit. Do you know anything about limit up, limit down, Gav?
A little bit. I mean, it's just where the market gaps. I mean, you know, it's doesn't particularly concern. I mean, you can get stuck in trades if you're if the market limits up or limits down. But,
yeah.
I'll talk a bit about it tonight in the closing bell.
Yeah, Gavin said he'd talk more about it in the closing bell.
Tom, this is EWW is a stock, I imagine.
Carlos.
For Carlos.
Yeah.
Right. It's an individual stock.
It's an ETF of what? I don't know. Carlos might say. Carlos, what's it an ETF of?
Well, there's some supply there. A bit of no demand there, look. So right at the moment, but it is acting as strong as the index, look. So this looks bullish. Except right now, it's just coasting a bit. You expect it to coast for the next foreseeable future.
Also, can we look at the weekly of the same thing?
It's acting strong.
So, shall I speak?
That's the weekly. Do you want to speak, Rita?
Well,
Rita,
Oh, that's
speak.
definitely.
All right.
Yes, he says it looks like we had a big 2-bar reversal on the weekly recently.
Yeah, look at the weekly chart. That's an entirely different picture. Look, it's plummeted down. You've got a 2-bar reversal at the bottom there, and that really is a gigantic shakeout. This will make that market bullish.
This is a derivative, if you like, or ETF for the Mexican Stock Exchange, Tom.
Well, I don't know too much about it, but all I know is that all these charts work the same, and they all work on supply and demand. Right. Now that's a shakeout. That will make that market a strong market. But you need to trade in harmony with the index, of course. You must have a parent index.
Talking about 2-bar reversals, there's a question here from Steve. Tom, when looking at 2-bar reversals, would it be correct to say that if the first bar's volume is higher than the second bar, this would be a weaker signal than when the second bar is equal or higher in volume? Or should they all be treated the same and wait for confirmation?
Well, they do come in varying degrees of intensity, these sort of bars. But the programming was very good. Originally, normally, you see, you can have high volume on the first down bar, but you can also have high volume on the second bar. But don't forget, high volume and up bars usually indicates supply present. So a bottom reverse will be stronger if the first leg down has got higher volume than the second. But the computer is quite good at picking that up, look.
You say, Tom, that if the second bar closes higher than the high of the first bar, that's even stronger.
Yes, it is, definitely. If the second bar closes higher than the first down bar, that makes it stronger.
Question from Oleg. Had Tom a period of losing money at the beginning of his trading? What did he change to start profits?
What was that?
Did you have a period of losing money at the beginning of your trading? And what did you change to start profit?
Well, when I started, I was very cautious. Every trader, I don't care who they are, will suddenly hit a loss of some sort. And usually when you look back in hindsight, you can see a reason why. But of course, when I was there, I was right in the midst of experts. So I made quite a lot of money there, but most of it was done by other people. Thank you very much. Now, my expertise only got to the level, say it is at the moment, because I had to computerize it. Now, when you're sitting by the side of a programmer and you have to instruct him to make lines of code that inform the computer that weakness or strength is here, you persevere and go through that, right? Then that teaches you. You teach yourself. And then my expertise greatly improved. And you could see it works. But that's when my real learning started.
Eleni says hand charting should be mandatory for every trader wannabe. Yes, it will help you to study and learn as you go along. Michal, Tom doesn't have any Polish charts or stocks or anything. I'm sorry about that. He doesn't have the data for them. Oh, Gavin does. Oh, I don't know now. Can you put that in again? If you come to the come to closing bell at 9 o'clock. That's UK time. Gavin will look at it for you because he gets that data. Edmund, after you were talking about going to the health camp, Tom, Edmund saying if Tom were to go there, the health camp will become a chart reading camp. Okay, so if we... Right. Okay, so there's no more questions. Well, there is a question here from Chris, but I wasn't here at the time, so it was at 22.6. If Smart Money had to test yesterday's test because this high volume, what chart was that? What chart were you covering at the... Okay, go back to the daily... Okay. Yeah, that's right. Oh, and there is another... if Smart Money had to test yesterday's test, something because this high volume. I don't quite understand the question, but...
I think I do. He's saying that the test is on high volume.
The test...
They're on low volume. Are they coming to retest the high volume test?
So Gavin thinks the test is on high volume. Usually they're on low volume, and are they coming down to test it again? Is that what to retest that? Is that what you mean, Chris? Yes, it is what he means.
Thank you for that, Gavin. But the thing is with these charts, it's almost certain If you're fairly certain this market's going to fall, for example, it's going to go up. And if you're convinced it's going to go up, it'll fall. It's just the way the whole thing seems to churn around human behavior. And the market certainly isn't there for your benefit. And the problem is, you see, you're sitting there by your computer. You're probably mostly on your own, and you absorb all the information of from the news and so on, and you're building up a sort of gut feeling, which naturally you feel because you've come up with it. It's probably fairly accurate. This coupled up with the fact is that human beings, they like to take a bit of risk. Now, but I would strongly advise you not to do any trading unless you actually see a proper sign of strength or weakness. Yeah. Yeah.
Mark is saying that high volume test could also end up becoming a failed test, couldn't it? Tom says yes.
Yes, you see, if you see a setup in the market, or even a test, or even upthrust, and you don't get the results that you're expecting, that's a built-in sign of strength or weakness for you. In other words, you would expect higher prices if you see a proper test. Right? Now, if it doesn't go up on that test, then there's a problem in the camp. And you would expect to see very often it goes sideways or even falling. That happens many, many times. But that's a warning to you. It's result, effort versus result.
Okay, so Edmund is asking for APH. Have we got the right data? Are we up to date, Pete, there? To yesterday. This is APH.
Well, this chart here, whenever you see these gap downs, that's a serious built-in sign of weakness. And that chart, there's no way that I'd be interested in going long on that, even though there's some sort of sign of strength here, which it will be, because this gap down makes the market vulnerable for a little bit of a bounce up. You want a 50% retracement chart like that, but that strong stocks do not gap down like that. There's something seriously wrong there. Although you may get a 50% retracement, it'll probably finish up on no demand somewhere up here. That's certainly not the sort of stock you want to buy.
This is Morris wants to look at TSLA.
Right. Well, this to me immediately looks weak. Why is that? Because, I mean, you've got, this is an attempted shakeout by the look of it. But the amount of supply around here is horrendous. I mean, up here, look, you've got no demand, you've got an upthrust, they've rammed it down, there's massive amount of supply present, right? Before that, if it was to become bullish, you'd expect a test of this volume here, this one, especially this one on this red bar. So this is not the sort of stock you touch right now. But it could be, if this market's marked down and the volume is very low, as it marks back down into this area where this high volume is, if it's low, then yes, it could go up. But this looks too much of a good thing as a shakeout.
Yes, it's Peter here again. So on that particular chart, Tom, so when I saw this, of course, the obvious thing you see is a bottom reversal. But if you look at where the recent top is only here. So normally you'd probably prefer to see a bottom reversal after the market has fallen. Is that correct, Tom? So yeah, that's why Tom calls it a bottom reversal. So when Tom first said, look at the volume there, I thought, well, actually, yeah, look at the volume there. And actually, is this in the wrong place to be a really good bottom reversal is the thought. So one has to look at these things using your, if you like, intelligence as well as knowledge of the principles. Yeah, so Tom's good advice is, if it's not clear, which this isn't, keep away from it. And that's the whole point. We can't guarantee, no one can guarantee to read every single chart to say what's going on and what's going to go on exactly in the future. However, if the principles appear on particular charts, those are the charts to look at. As Tom says, and used to say quite a lot, he's not said it recently, wait for your bus to arrive. In other words, get on the correct bus, get on the right train, don't just jump on anything, otherwise you'll come unstuck.
Because Carlos is saying, remember I don't know, had a 2-bar reversal. Was that the weekly? That if we looked at this earlier, I guess we should expect the same test on the EWW ETF we just saw, since it has a gigantic 2-bar reversal as well, question mark. Well, I'd say no.
This is a better. See, this is an example of a bottom reversal. No, it is bottom. In other words, it's fallen the market. Where the last one we saw is almost like a bottom top reversal. In other words, it's a shakeout rather than a reversal. But this chart, look, it clearly looks like a bottom reversal, where they've ramped it down on the first bar, kept stops, mislead everybody, shake out the weak holders, and so on and so on. And then a rapid next bar up, widespread, close the high to lock everybody they can in or out of the trade that missed it. That's what that bottom reversal is. Now, if you see a test now, which I think you need to, then that's fine, go along. But the other chart, the so-called bottom reversal was too close to the top. You see the difference? There's a big, big difference.
Yes, Oleg got that now. He sees what you mean. Michael is saying on the subject of 2-bar reversals, Gary Dayton, January 17th, 2011. That was at a webinar that's in the archives, I presume. So if you want to look at 2-bar reversals, have a look at that. Mitch asks for MU. I'm looking at MU and wondering if I'm seeing distribution. It is at the top of a trend channel that goes back to 2007. So wow. Oh, just trying to put more data up there. So he's saying he's wondering if it's distribution, it's at the top of a trend channel that goes back to 2007. That's the weekly. Almost there, yeah. No, it doesn't say. Yeah.
Would it be fair to say, Tom,
Well, if you go back as far as this, it's very useful to draw long-term trend lines, because these trend lines work when they're drawn out into the future. And as the data arrives at them in the future, something will happen, something that you will be able to recognize and analyze. Trend line will be a resistance line to either higher or lower prices. You could draw a trend line on this figure. First two lows and the first high. Seems quite logical. First high there. I find it difficult to look at a chart with no trend lines on. Should be on that bar. That's it. There. Now once you've drawn a trend line, it seems to put a bit of common sense to the chart, look. What they're doing, they're distributing a little bit at the top, letting it fall on that weakness, and then buying it back. And what's happened up here, look? Can I see 20 bars? 20. There's a trend line there.
Yeah, so you can't really see that, Tom, because it's too
Yes,
far back there.
but that looks like a sign of weakness there. That bar there. Well, it is. That's why it's come off a little bit. And you've got a red bar here, which means it's pressurized on the downside there. There's definitely an increase in volume there, followed by no demand, look. So right now, is this the top trend line, Peter?
It is.
Right. Yeah, so what's happening is, it seems to be getting ready, tuning itself up for another dip in the roller coaster ride. So we've got some weakness, no demand, weakness, no demand, and that seems to be adding to the roller coaster that the past history showed us this stock likes to do. So you certainly don't want to be long at this stage. I'd certainly much rather be short than long.
So last chart.
Microsoft.
It's
Oleg.
Microsoft.
Didn't we look at this before?
You must have got some channels going on there.
That's got a bit weird. So we'll get rid of that, I think.
Yeah, those trend lines.
Right, so Microsoft.
Well, funny enough, Microsoft soft looks weak according to that. That looks weak, although there's a lot of volume here. Must be some news here, look. They gapped it down, but there's a massive amount of volume here. Well, such a heavily traded liquid stock, I suppose. But this here, as we saw in that other chart, really strong stocks don't do that. They don't like gap down huge amounts like that. There's something wrong somewhere in the fundamental analysis of Microsoft. But I'm saying that there was definitely a buying here, look. Massive amounts of volume. Yeah. Okay. So certainly not a candidate to buy at the moment. Yeah. Okay, so we'll say good night to you, and we'll be doing a newsletter, I think tomorrow or Sunday. Probably Sunday.
It will be Sunday.
Sunday. Because Rita, as you know, types it out. And without Rita, I'm afraid I couldn't do it. Because she types so fast, it's wonderful. And Peter helps as well. Anyway, I say, well, thank you very, very much for listening. And I do hope this has been of interest to you and given you information. We're with you also next Friday at the same time, so you can have your questions ready. Anything you're not quite sure of, please ask.
Okay, folks, so have a good weekend, and we'll see you all next week.
Bye-bye, everyone.